Hey everybody, welcome back to another Midas Letter Daily. I'm here with my good friend and co-host, Mr. Edward Waleski.
I just got to shut my phone off here.
Hell of an idea. Always good to be off the phone when you're doing a show. We have an interesting show today. Obviously, we're going to talk about the war in Ukraine. We're going to talk a bit about Putin's possible exit strategies from our perspectives. We're going to take some audience questions. We're going to talk about the price of copper, gold, lithium, nickel, you name it. We're going to talk about it. We got a lot to say today. Great show coming up. We've got Terry Harbert, who's the CEO of Talisker Resources, to join us today to tell us about the progress on that. Actually, there's 2 gold deposits they're working on now. And then we have Max Golka joining us, and he's the CEO of Elementus. Elementus is a search engine for blockchains, and they have ties to Palantir. Ooh, there's a dark company.
Is there stuff going on there at Palantir?
You don't know what Palantir is?
Oh, I guess it's a bit of a,
Palantir has government contracts. You know what Palantir does? Big data analytics. So basically, all the listening that's going on by our devices, all that recording is being funneled into a big database.
Yeah.
Palantir sifts through it for keywords.
And comes to conclusions.
Looks for patterns, exactly.
Comes to conclusions.
Actionable items. Actionable insights.
Revenue generating ideas.
Revenue generating ideas. But
woohoo! We're going to make some money.
If you're enjoying the show, subscribe to Midas Letter on YouTube so you stay up to date on everything investment. Audience questions. Kerry James wants to know, why did the U.S. equity market rally, marking the biggest 2-day in the S&P since April 2020 from the Fed's rate hike? Well, Kerry, here's my theory, is that the Fed has now become so reliable at front-running bad news through direct asset purchases, through some affiliate. I don't know whether it's the president's working group or they just have an informal deal with, hey, Jamie, on the golf course, it's like, we're coming out with some bad news, so we need you to go into the index futures market and buy the crap out of it on this morning. But I think that there's a contingent of investors on Wall Street who realize, you know what, if the Fed's coming out with bad news, index futures are going to fly because the Fed's going to be all over them, buying them. And I think that there is direct asset purchases in support of the Fed's agenda to paint the tape positively on days where the logic dictates that markets should not be going. There's nothing bullish in the marketplace about the Fed raising rates. Correct me if I'm wrong.
Okay, so my take is this. People were really worried about inflation. They're expecting a 0.5 point increase, right? But they didn't get a 0.5 point. They got a 1/4 point, so it makes me think that the tightening isn't happening as fast. So it's still a little loosey-goosey, which means there's more froth out there. And the markets got so pounded, they got so pounded, it was like, bring us a 0.5 point, 3/4 point. What? Only a 1/4? We're fucked. And the shorts started to cover.
They're not serious.
The shorts are starting to cover. Okay. That's how I would look at it. And you know what? That rally in the last couple of days maybe has run its course now.
Yeah.
But I tell you,
interesting perspective.
Maybe it will happen.
It's completely wrong, but it's very interesting. No, I'm just kidding. What do I know?
What does anybody know?
What does anybody know?
You're gonna kick the bucket. That's about it.
Well, I don't even know that.
Well,
if we're only energy and matter converge, and that at the point of our death we can only transform,
stardust,
then maybe there's death is the actual the mistake we're making is assuming that there is a death. There's no death. It's a transformation.
No.
Anyways, Barbara Walters, who's now watching our videos apparently, says, just came across your videos. Very interesting. What do you, I'm sure there's a word missing there. What do you think the stock market will do in 2022 because of the world situation? Well, Barbara, that's a very open-ended question. The stock market will be full of stocks that go up, and it'll be full of stocks that go down. I think that 2022 is not the year to be investing in the technology majors. I think 2022 we're going to see some of the commodity stocks do better. And I think that it's going to be largely sideways for large caps. And I think that earnings are definitely going to be stagnant because COVID is still limiting economic activity and growth, as we're seeing the return of COVID cases while China's out of control right now. The UK is starting to see a rise both in hospitalization and infection rate. Meanwhile, the Western Hemisphere continues to deregulate COVID precautions. Mandated masks are over, mandated vaccines are over. This is having the unintended effect of people who are very much aware of the science are saying, for myself, for example, I'm not going to restaurants because they've removed the vaccine mandate. I don't want to go to a restaurant and know that there could be unvaccinated people sitting around and they're being a super spreader. I'm not going. So this is having an effect where it's actually depressing economic activity because people won't fly, they won't get on cruise ships, they won't go to restaurants, they won't go to shopping malls just because the government's saying,
well, where do they go? They'll go to the liquor store.
Or, to hell, boy, go straight to hell, boy. No, they'll go to the liquor store.
I think we got to keep our eye on these interest rates too. And to answer, just to add to your great answer, I think if rates continue to edge higher.
You thought my answer was great? Really, Ed?
Yeah.
Oh, gee, coming from you, that means a lot. Still often I get a compliment.
I think you need to go get.
I get teary-eyed. Yeah, it was a great answer.
Teary eye better than a Cheerio.
So what were you saying? Sorry to interrupt.
No, I just keep your eye on interest rates. Like the interest rate, because this debt level is going to start to.
So there's a question for you. What are the chances that with the continued economic fallout from inflation and from the Fed pussyfooting around interest rate increases, what do you think the chances are that the market just goes full on again? The Fed says, screw these rates, back to 0.15%, and we're going to start printing $500 billion a month now. Yeah. Like, what are the chances of that happening? Well, that's been their ultimate response.
It depends on, I think, the mood of there's a voting sector of the United States that keeps people in power. It's all about, what do they get? If they're worried they're going to lose power.
The oligarchs, the American oligarchs.
They'll do whatever they have to do to keep the power.
The American oligarchs.
So, you know what? And if they don't, it's interesting to see this. I would have never believed that what we're watching in the Ukraine and Russia would have ever happened in. Being from Polish stock and having the parents having a lot of Ukrainian friends, it sort of makes you feel a little. The
Russian people, I actually feel for the Russian people because they want no part of this.
They're being duped.
Robert Urich has a question. Should we care about Goldman Sachs lowering its S&P 500 forecast? They said that inflation was going to be transitory. Either they are exceptionally, bad at what they do, or what they say publicly is different to what they say to their clients. Robert, Goldman Sachs is like a giant skyscraper full of hundreds of different businesses. And each of those businesses has its mandate to do whatever they say. So the commodities guys will come out and tell you that oil's going to $150 because they're long oil. And yet the index funds guys will come and tell you that S&P's going down because they're short. And you should never look at Goldman Sachs as one entity. You should look at it as a combination of a building full of independent businesses, each tasked with making money whichever way they can. So, should we care about Goldman Sachs lowering its S&P forecast? Maybe. Depends on which part of the market you're going to invest in. If you're going to invest in index futures,
There's always something going up, I think.
Yeah, there's always something going up. That's right.
Yeah.
Bad news for one company is always good news for another.
Your expense is someone else's revenue.
And in terms of Goldman Sachs did not particularly forecast that inflation was going to be transitory. That was the Fed's forecast, which Goldman Sachs parroted. And so I don't think you should say that Goldman Sachs said this, because I don't believe that's actually right. They did repeat what the Fed said, and the Fed has now changed that word transitory to entrenched.
And the other thing, too, if oil keeps rising, that is a natural, that's like putting on the brakes. Eventually, oil going up, keep going up.
Well, that's
you stop doing everything. You got to feed your car with gasoline.
Yeah.
And everything's
what?
Jet fuel. Everything's tied around that. And back to energy cannot be created nor destroyed.
Can only be transformed.
And so you know what? We should
You know
really.
what oil is? It's solar power.
When oil gets trounced on, we should be loading the truck on oil. What's wrong with us?
We should be loading up oil? I got a tank of diesel across the property there.
Sell it.
You know what?
Sell it.
I can't sell it. I'm using it. I'm still paying.
Oh, the dogs are now barking. We got them all worked up.
Well, we got them excited.
They want to get some diesel.
They want to buy, sell, buy. Anyways,
right.
J.W. Alexander, here's an interesting question. Do you trust the news? Well, do I trust Fox News? I do trust Fox News to lie to me. No matter what they're saying, it's a lie. I trust Fox News to lie through their teeth. Do I trust CNBC? I trust CNBC to parrot what the Fed wants them to tell us. Do I trust CBC? I trust the CBC to stay sort of myopically focused on the Canadian perspective and not really have any validity in the world interpretation of things. So I do trust the news, I just don't rely on it. And I think that's what you're asking me.
I just want to say, because I have this recurring thought about trying to recall something that's happened in the past. In other words, the news. The news is
That's
something.
the olds.
It only happened the way it happened, and it's impossible to really say how it happened because you're going to miss the time of day. You're going to miss.
People laugh at this, but you know where I get a lot of my news? TikTok.
Yeah.
TikTok and Instagram. You know why? Because people are on the ground in the Ukraine making videos.
Yeah.
And you can tell by the circumstances in many cases that it must be this day because it correlates with what the mainstream media says. But I find mainstream news is late to the party. I've already found out most of what mainstream news tells me thanks to TikTok, Instagram, and to a lesser extent Twitter. Okay. Twitter's much less trustworthy. That's just
All
me.
right.
Marcus Chong wants to know thoughts on the nickel surge in Zhang Guangda, controller of Tingshan Holding Group Corp, amassing a short position on the metals exchange of 100,000 tons per nickel. Now this to me is exemplary of what is wrong with the whole futures market in its entire execution, is that you should not be able to amass a short position on 100,000 tons of nickel unless you've got 100,000 tons of nickel to deliver. If you don't have that, and there's not 100,000 tons of nickel to be had.
He created his own short squeeze.
He created the bubble. He created a bubble within the market. And that's what is wrong with futures. You should not be able to do that. You shouldn't be able to bid on more of the commodity in question than there is or is going to be soon.
They should come up with a product called Yesters, like futures for tomorrow, Yesters for yesterday.
Yesterday.
Yesters.
All my troubles seem so far away.
Bring on the jesters.
Then the price of nickel got away. Oh, I'm so poor from yesterday. If you like the show, you'll love our website. Visit us at www.midasletter.com for interviews with key CEOs, cannabis news, and to subscribe to our newsletter. Anyways, let's start off with a look at the price of copper here. So here's where they started talking about interest rates rising. This is the day the Fed came out and said, okay, here's the plan. Woo-hoo. And notice that the price of copper had been sold down low here.
Yeah.
But now that the interest rates are a lock, and we're now looking at a modest, what was it, 50 basis points? I didn't even...
25.
25 basis points.
Meager 25.
What a bunch of bullshit. That's not going to do anything, so
Well,
we can look forward to higher prices.
So that's basically what's happening. It's like, hey,
well, look.
you're not getting aggressive? Okay, these commodities are going to go back up.
Fuck
or it's going to cause you more problems.
Exactly.
So they're
charge
not,
more for everything.
There's a constant vibe out there that the Fed is behind the curve on this.
The curb?
The curve?
Curve.
Curve.
Behind the curve.
Curve?
Yeah, behind the curve.
Cur. You mean like a wild dog behind
curve.
No. Cur. Like a cur, like a wild dog.
No.
Behind the cur.
No.
Yeah,
curb.
no.
Behind the curb. Not behind the cur. How is that supposed to be behind the curb? What is that?
You're behind that wild dog. The wild dog dictates.
A wild dog. A cur is not necessily a wild dog. A cur is merely a female.
Well, we'll see on another show.
Okay, you old cur.
Okay, so.
Anyway, so we'll close that now. Let's take a look at another chart. We're going to escape from that. So there's the price of copper taking off.
Copper's...
and let's quickly take a look at our favorite copper company that is correlated negatively to the price of copper. U.S. copper. When did the price of copper first take off?
March 2020, I believe. March 2020, when it tanked, just when as they were coming on to COVID, and then the opposite took place.
So this is the thing, on a relative basis,
It's done okay.
it's doing okay.
Yeah. You know what? I didn't want to say too much.
Right.
There you go.
Right.
So look.
But if you look at purely price basis.
Yeah, it's gone from about 5 cents to 10 cents. It's a double.
That is some optimistic thinking there. Yes,
but
well,
as
anyways,
you know, people of our ilk can't get rich on 5 to 10 cents.
we can.
Well, we could if we were positioned properly.
Well, if we didn't spend like drunken sailors. Anyway, so there's the price of U.S. copper. You know, like you got to look at it very closely to get the appreciate the. So there's the reversal is in.
Yeah.
Price is 9.5 cents now.
Yeah.
And I've still got 780,000 shares of this, which is what, a grand total of $63,000 worth at this point. Again, we're conflicted. We own it.
It's all
there you
good.
have it. Yeah. So, but hey, you know what? Enough about copper. Let's take a look at the price of gold, shall we? Gold, damn it. There's gold in them there.
Yeah, gold got over 2,000
briefly
when the oil went nuts. There's your double top there. See?
Okay.
That was 3 years ago.
Yeah.
Now, if you can't get through there over a period of time, it starts to break there.
Yeah.
You might say the bull runs over for a while.
The bull run is over for a while.
In gold. Okay, what about oil? Let's take a look at oil. It went from 130 to 93 briefly, shot up back today to 103. Where is it right now on this?
103. What would you say is the single most important factor driving it back downward?
The fact that it went up so fast.
I think it's the
changed the price and all the people that, you know, like for instance, think about the money going into Saudi Arabia.
Well, I got to think in the futures market for oil, it is more thoroughly populated by commercial hedge players than any other commodity around, except maybe wheat.
No, I think oil is the number one.
It is the number one. Oh, okay.
Yeah,
so you're agreeing with me?
Well,
whoa!
Yeah.
Stop!
Not so much I'm agreeing with you. I think you got
I knew it.
You got lucky on this one.
Oh, I got lucky, did I?
So I've already thought that.
Well, there's
so it's more like you're agreeing with me. Let's
okay.
say. Okay.
I don't mind.
No, I think that the oil game. I think 95 million barrels a day get consumed every day, every single day. And you know what? Doesn't stop on Saturdays or Sundays. Just keeps going.
No,
Pump
some
away.
might say that there's more Sunday driving going on Sunday than any other day.
Well, but you know, the uses of petroleum products,
okay,
like plastics, etc.
But
anyway.
Back to the price of gold here.
Yeah.
1941. We draw right out here to the max. Let's go to the max. Now we're going to go back 100 years here.
Wow.
And
yeah, it does look higher.
Yeah. So has gold been a good investment over time? Show me one other commodity that has this much of an appreciation over time. Well, I guess oil.
Silver.
Well, silver and gold are, you know, it's
well,
like...
yeah, you said another commodity.
It's like your left foot and your right foot.
Wait a minute, are you saying silver and commodity are the same?
No, silver and gold are the same.
Well, so what are you saying?
Nothing. Okay. Anyways, enough about us. Here's... we're going to hear about a gold story that's going on right now in British Columbia. This is an actively exploring company, 40,000 meters of results coming. I'll let the man himself tell you. My next guest is Terry Harbert. He's the CEO of Talisker Resources Limited, trading on the TSX under the symbol TSK and in the United States under the symbol TSKFF. Terry, welcome back.
Thanks very much. It's been a while.
It has been a while. It's been a couple of years. And the reason I was eager to have you back is because I've been seeing both the price of gold trending and yearning ever higher at the same time that your press releases and your drill results continue to demonstrate very encouraging results. So what has happened in the last 2 years to move this whole project forward?
Well, an awful lot of diamond drilling. We're at about around about 120,000 meters in the ground now, and really on track for that first resource up at our major project up at Braylon.
Perfect. Okay, so then in terms of the movement towards a producing mine, how much further along are you in that? What's the sort of status of the estimated resource at this point?
At the moment, we're targeting our a resource range of between 1.5 and 2 million ounces. At present, for this first resource, we're looking at high grade veins. At the moment, we've been targeting around about 14 of the somewhat 60 veins that have been identified at Braylorn. So what we're drilling at the moment is only a fraction of what's actually there. Of those 14 veins, we're well advanced on modelling those veins. What's of interest to us as well is what sits outside of those veins. What's very clear to us is that there's an awful lot of gold that sits outside of the veins in alteration or fracture halos around the vein. And last year, we also intercepted some very interesting large-scale bulk tonnage mineralization. So these were 100 gram meter intercepts. So that's all quite new for us. We probably won't have much of that modelled of the bulk tonnage for the resource. It'll be predominantly a high-grade resource, but we're well on our way to that. Currently 9 rigs turning, so a pretty hectic site up at Braylorn at the moment. And we're looking to have that drilling completed sort of mid to end Q2, and then come out with that resource. We're also working on increasing our mine permit capacity. So Braylorn, as you may remember, is a fully permitted project, water discharge and production permits, and we're looking at increasing that daily tonnage. For the high-grade veins, certainly is. We don't really have a potential number at the moment for what the bulk tonnage could look like. So we're having a look at bulk tonnage areas, both open pittable, but also bulk tonnage underground as well. So that's in fairly early stages, and we think that'll add to that potential volume. So hopefully increase that well beyond the 5 million ounce estimate.
Mm-hmm. And has the sort of the strength in the price of gold been a help to what you're doing? I mean, you just closed a private placement for $12.5 million.
Interestingly, it hasn't. We've really noticed over the last 6 months there's been a decoupling in the gold price relative to junior miners and junior explorers. So I think a lot of your listeners are probably well aware of that, strong supporters of the junior mining space. And we haven't really seen that level of funding come back into the juniors. Sort of January, February this year, looking at the JDXJ, we've noticed the junior producers have had some inflows back, but we're still not really seeing that in the exploration space. So we have seen some good capital raises, mostly for advanced projects such as ours, that are either coming into their first resource or have a significant resource already on the books. But I think we clearly see that most junior explorers are very well undervalued, despite this incredible run with the gold price.
Mm-hmm. And so what about your other project, the Golden Hornet project? Is that, you just started a drill program there back in January?
Yes, very happy with how that initial work went there at Golden Hornet. It was only a small first phase exploratory project, 14 holes we put in there, just under 5,000 meters. Very happy there that each of those holes intercepted sulfide and silica mineralization. We've put a couple of press releases out there on that discovery. Some pretty good intercepts with high-grade gold, copper, and silver in those intercepts. Looks really exciting at this stage.
Yeah, you bet. So then, is the absence of sort of participation in the junior mining side? Historically, you know, when gold is trending towards all-time highs as it is now, that's when we see the sort of broader investor interest come into the junior golds. And that has not happened here at this point. And I'm wondering if you have any insight as to why that might be in this particular cycle.
Sure. I think it's just around the corner. I think the clocks are really ticking. The main thing is that producers and advanced developers are actually fairly cheap at the moment, fairly low multiples. And so I think a lot of the investors, and particularly the generalist investors, are investing in those companies, not so much in the junior space. We've had a pretty good exchange ratio between the US dollar and the Canadian dollar and the Australian dollar and other key producing countries' currencies. And we've also had a relatively low oil price. So the Australians and the Canadians in particular have been able to produce gold relatively cheaply at fairly low all-in sustaining costs. And it's a pretty good investment proposition without having to go to often the more risky junior mining space. So clearly what we're starting to see now, and unfortunately a lot of it's backed by some global unrest, is this incredible increase in the oil price, also increases in inflation on a global basis. And what I believe is that this is going to have an impact on these all-in sustaining costs of the producers, and they're going to become less interesting for the general market space. And I think we'll see this transition back into the junior developers and then into the junior explorers.
So the price seems to correlate very tightly to what's happening in the major stock market indices in the U.S. If they go down, gold goes up, and vice versa, which is kind of historically the case. But do you see that sort of relationship continuing, so that if we see, for example, this year we're expecting, starting today, I guess, increased interest rates by the Fed, as well as the withdrawal of stimulus, which I've always felt was largely responsible for the absence of interest in the mining sector generally, because it subsidizes the tech sector. So those two sort of catalysts for the tech sector and major stock markets are being withdrawn. So do you think those are going to contribute to a runaway gold price at some point this year? I mean, at $1,900 and $2,000, it seems like it's trending at the higher end of the range, but it still looks like it's got some breakout impetus behind it, especially as the Fed moves into rate increases combined with stimulus withdrawal. Do you see that as strengthening your value proposition?
I think so. I think realistically we have a short-term pathway, a mid-term pathway, and a long-term pathway, and they're really triggered by very different things. At the moment, what we're seeing is a lot of people have concerns about the marketplace in general, whether that be trillion-dollar tech stocks, whether it be biotechs, whether it be junior mining. And a lot of people are pulling out into cash and just waiting to see what happens in the geopolitical scene, what happens on the inflationary front, what happens relative to the devaluation of the US dollar, which I think we all probably believe after many years of quantitative easing has to come at some stage. So I think that's probably controlling what we see on a short-term perspective, that people aren't rushing in, even after a black swan event that we've just had, people aren't rushing into the market to pick up bargains. And that's going to change relatively in the short term, I think. Looking at the midterm, that we have the balance of inflation and interest rates. And as interest rates move up, it's always the balance of do people invest in gold or do they move them into interest rates? And I think the certainly the capital gains that's available in gold, as it has a run to the mid 2,500s, is certainly going to outweigh what people can get from an interest rate perspective. If we index up the gold price to an all-time high, whether you choose from the 80s, mid 90s, or in this last cycle, it hits about 2,500. So we still do have a fair range to hit our maximum price range. Unindexed, we're there now, but indexed, we've still got another $500 or $600 to go to hit. So we have a fair bit of scope before we can hit those all-time highs. And then generally there's a run beyond that. So whether we can get to 3,000, I don't know, but I think we've certainly got scope to get to 2,500. As a long-term perspective, even though we see investment in gold as a safe haven, as we have for thousands of years, people migrating across in it, the main thing that stimulates the movement of the gold price over long term, I think, is very solid, and that's the jewelry industry. And about 80% of all gold production goes into jewelry. And long term, we're not going to stop creating more people. We're going to keep creating wealth around the world, and those people are going to use gold as a jewelry store of wealth. So I think the long-term increase in the gold price is also very solid. So short, medium, and long-term at present all look very good for the gold price.
Sure thing. Okay, and finally, what are the things that investors should be keeping their eye on Talisker for in 2022 that will be the most exciting potential events for you?
Well, we've got some really interesting events coming up. You know, the first main catalyst is our resource. At the moment, we're trading at a fairly low EV per ounce, as the rest of the industry is, basically because we don't have any resource. So coming into that resource will be a major catalyst. What we're clearly seeing over the last 6 months or so, or even over the last year, is a very strong M&A industry. We've seen some mega mergers go on, 3 of those coming in. We're seeing a lot of single asset acquisitions. And what's very clear to me is that there's very few available advanced stage project in tier 1 jurisdictions. So that's where Talisker and particularly our Braylon project really stands out. Having a permitted project that has potential for multi-million ounce production. The permit we're increasing to be able to give us a scope to be able to see a pathway for plus 100,000 ounce a year production when Braylon goes into production. And there's not very many of these assets available in tier 1 jurisdictions. We can probably count them on one hand. So we're hopeful that there'll be significant M&A activity around or slightly post our resource coming out. The front runner for that, of course, is New Gold. They're our cornerstone shareholder with 14.9%. But there are a lot of other interested parties and projects at this stage that have been greatly de-risked. They're really quite rare in the industry. So I think around or post our resource, there's going to be a lot of excitement and a lot of strategic interest into nailing down these near to production assets for these majors and intermediates that have been producing a lot of gold and are really struggling to replace their resource bases.
All right, Terry, that's a great update. I really appreciate your time as usual, and I'd like to have you back soon. Thanks for your time today.
Thank you very much.
Bye for now. Guys, here's the chart on Talisker. As you can see, it has been correlated negatively to the price performance in gold. How
long is that chart?
This is, well, how long do you want it to be? How long is a piece of string? There's 1 year.
Let's go 5 years.
5 years on Talisker.
Okay.
Ooh, look at that.
Because it's down at the bottom. Well, that's the whole sector, though.
The junior golds. Well, this is the thing, as Terry mentioned in the interview, as we discussed, that the juniors have not really participated in the commodity bull yet. And he made a great point, which I really thought was excellent. He said, well, the major producers are still not, they're still not overvalued. They're still not, the price hasn't run up. So why would you buy a junior when you can still get a producing major with zero risk or lower risk for a decent price? Good point. Until those things take off, there's going to be no junior.
The other thing, too, the big boys have got to start buying the smaller companies because their own resources are diminishing.
Right.
And
what do they wait for? They wait for their share price to get higher so they can give fewer shares.
It's all starting to happen. I think we're coming into a very serious period for
Consolidation?
for new sources of some of these commodities. Like copper in the long run, I think.
Well, okay, so let's talk about that. So if you look at gold, gold is not suffering from a demand.
It's not industrial. It's not industrial. It's more of a money.
Right, and it's not in short supply. So the price of gold is jacking along, and there's not too many people accumulating it because the global monetary powers have made a great effort of marketing the fact that gold is not the best reserve currency. The U.S. dollar is.
I think there are a lot of
No,
people.
but we've got some old
India's
school.
accumulating it.
Huh?
Putin's accumulating gold.
Yeah, but Putin's days are numbered. Let's face
Jesus,
it. You think he's cooked?
I think he.
He's Goosey's cooked. Well, do you think
I think
he's
he's had
backed
the
himself
biscuit.
into a corner?
Probably, yeah. That's my concern.
Yeah, there's no out for him here.
You know, he's.
He's well and truly effed. A moment of silence for Putin in
Jesus.
advance of his imminent assassination, i.e.,
my
or death
God.
by misadventure, or probably he'll commit suicide.
I don't know.
Yeah, no,
Yeah,
he's,
I don't know.
He's toast. So nice to know you, Vlad. A little bit too aggressive there on the hegemony.
Yeah.
Anyways,
Taking it to hospital.
you know, the Chinese are supposedly making life for Russia difficult behind the scenes for their invasion of Ukraine. The Chinese are like, no, that's not how it's done, Vlad. So, but on the other hand, the Chinese are like, good, we got rid of the Russian bear because Vladimir Putin has single-handedly pushed them back to the days the Iron Curtain fell. And it's going
Yeah.
to be chaos in that country for decades to come.
Yeah, I know. It's mind-boggling to think.
Yeah.
And you'd say the average Russian's probably better off today than they've ever been.
Well, at least the
Well,
97
you know,
oligarchs.
that's the problem.
Yeah.
Problem is, you know, you got to be careful to try and equate your happiness with material things.
Right.
You know, I think it's nice to have some convenience. Like
Right.
hot water.
Well, you know, no matter what, you fall into routine. And routine is the foundation of boredom.
Yes.
And so if you get wealthy and suddenly, like, Vlad's got that $100 million palace out there in the hills, I guarantee he's bored and lonely.
Yeah.
And so, like, what has he done? He's
think
made
he-
himself more lonely.
Think he gets a few of the ballerinas over from the Bolshoi?
What else has he got? I bet you right now he can't get it up. I bet you right now a bottle of Chalice will not help that poor man.
Oh, Jesus.
Anyways, poor Vlad.
Okay. Enough about-
And while we're talking about it, let's just take off our hats and acknowledge the pure heroism of Volodymyr Zelensky. This man is
He's a young guy. I think he's only 45
and
years
he's
old.
a comedian. Now, is he a comedian first and a president second?
He started off as a comedian.
Yeah.
And
what a man!
slash actor.
Yeah.
And took on this gig as a.
Did you see his appearance?
And you know what? It was a bit on a lark. He ran for and he won.
Did you see his appearance to the Canadian Parliament?
No. By Zoom.
Yeah, he's calling Justin. No, Justin, put yourself in my shoes. Every day your children are getting bombed to death in the streets. And he does a very good job of personalizing the experience for his audience. He told a completely different approach to the American Congress, which he did the next day. He's like, you guys are the leaders of the free world. Where is your leadership? Where is your leadership? You are abandoning us. You are not the leaders of the free world if you are not participating in our fight for
I know,
freedom.
but isn't it people are walking around like on eggshells because of the cosmic threat, not the cosmic threat, the nuclear threat. That's the whole thing here, isn't that?
Now-
That's the big stick he's waving.
Now, look at this, though. Look at
I know.
The Russians plane takes off and it crashes. Why? Because it hasn't been maintained properly. The
I
fuel
know.
line's
That's
clogged.
only going to get worse.
Well, so do you want to push the button on 600 nuclear warheads, not knowing how many of them are going to come falling back to Earth? You'd want to be damn sure
Yeah.
every single one of them was going to leave your airspace.
Yeah, you maybe some of those missiles are made by Lada.
Lada. Have you ever driven a Lada?
Well, a lot of shit there, I'll tell you. Oh,
I drove a Lada from
Yeah.
Toronto to Florida when I was 16 years old.
that's a lot of driving.
That's a lot of driving.
Oh.
I drove through the night. Oh boy, I remember that driving to
And it was
Florida at my dad's place.
only
That was my dad's
24
girlfriend's car.
hours with my Lada. Okay.
That car's gone, eh?
You know what? They weren't the best when it came to style, the Russians, you know? You always
Yeah.
got that feeling.
Yes.
Although they're pretty tight with the Italians, so...
Yeah. You know, Russia's apparently been moving a lot of money around using the crypto universe.
Well, surprise, surprise.
Big shock there. Well, and here's our next guest is going to tell us how they are going to work with government agencies to find people committing hanky-panky in the cryptoverse. My next guest is Max Gelke. He's the co-founder and CEO of Elementus. Max, welcome.
Glad to be here.
Max, this is an intriguing proposition. The company is billed as the first universal blockchain search engine, and that is intriguing on so many levels. Can you give us a bit of a description of the idea, the concept behind it, the value proposition for its investors?
Going back to the telephone system as an analogy, also just like the blockchain, a big open database in a sense, a big open network. But in order to find your way through it and in order to properly use it, you needed a phone book, the Yellow Pages, as sort of the global map or index to the phone network. Looking forward to the web, the analog to the phone book is obviously the search engine, in particular Google, which allows you to find your way through the web, which is also entirely open and transparent, but is just quite big and very difficult to tame without the search engine. And going into the blockchain, similar profile, a very big, open, transparent network, but one that is hard to make sense of and hard to properly use without a global indexing function, which is what we aim to build at Elementus. And just like the purpose of the search engine was very different from the purpose of the phone book, what we're doing, it fits a very different purpose from Google. The use cases that we focus on are for, we work with law enforcement to help them catch bad guys and help them follow the money and see where it goes. So folks like ransomware, human traffickers, darknet markets. And we also work with financial institutions and other crypto custodians to help protect them from risks, to make sure that they're not interacting with any of these kind of illicit actors on chain. And as the ecosystem develops, I foresee this being the need to be able to see who you're interacting with and what's happening on chain as being a fundamental need of really anybody who is operating in the blockchain.
So how does that reconcile with the fundamental value proposition of a blockchain's privacy in terms of transacting?
It's a tough balance, and I think that in some ways there is always going to be a natural equilibrium. So often I think the view is that use cases like the ones that we're focused on are somewhat diametrically opposed to people that are building privacy technologies. And actually, I would say that we are actually 100% aligned, that for blockchain tech, for cryptocurrency to gain adoption, there are two things that are strictly necessary. For one, people need to be able to transact privately and not have their information out in the open. I would not want to be operating if my bank account statement was out in the open for anybody to read. So the privacy aspect of it is absolutely paramount to cryptocurrency gaining adoption. What is also necessary is for laws to be enforceable. If laws are not enforceable and if there is no transparency at all and no ability to follow the money and to see what's happening, it's also not going to gain adoption. It's not going to be it's going to be too dangerous for people to get involved if criminals are able to use the blockchain freely and rampantly. And if governments don't have that transparency, then that's when governments are going to stamp down and just disallow it. And I would say that so you need both, and you have a good analog for that just looking at the traditional fiat system. Right? On the one hand, you have bank transfers. And on the other hand, you have cash, which is, for all intents and purposes, untraceable. But that being said, cash doesn't allow, just because it's untraceable, doesn't allow money launderers to just get away with what they're doing. They don't exclusively use cash because if you show up with, say, a duffel bag full of hundreds at your bank to make a deposit, that's unlikely to go by without raising some eyebrows and taking on more scrutiny. So in the long term, I foresee kind of some of these privacy technologies operating side by side with the portion of the blockchain that is transparent and that is viewable and auditable. And
certainly the Federal Reserve's white paper recently sort of partially leaked on about the future of cryptocurrencies was interpreted by the crypto community as being net positive towards the responsible development of cryptocurrencies. Yet to me, I mean, as a crypto skeptic, as it pertains to Bitcoin and cryptocurrencies in particular, it was very plain to me that the only cryptocurrencies that are ever going to be permitted are those which can be traced and tracked. There is no such thing as privacy in today's modern financial universe, given, call it the pretext of terrorism, that whose capitalization must be tracked, whose financiers must be tracked. And but also from the perspective of taxation. I mean, governments run on taxes, and so it's been since the sort of deprecation of offshore banking through the launch of the Patriot Act and Switzerland and all these offshore havens now have to disclose all their transactions. So it strikes me as inevitable that a search engine that can accurately trace and track certain transactions is going to be required. Now, you have an affiliation with Palantir Technologies, who is also in the business of tracing and tracking and identifying patterns in big data through analytics that serve the purposes of detection of threats for law enforcement, among other things. Obviously, they use it in marketing and advertising as well, but a lot of people I talk to misunderstand that Palantir's real sort of attraction for governments is its ability to sift through the big data, all of the sensors out there capturing all the conversations and the emails and the texts. I mean, it needs reconciliation, etc. So to what extent is the sort of that ability to sift through the vast amounts of information we now generate part of your blockchain technology?
You raised several different questions there, which I'd like to respond to. So hopefully I can I'll remember all of them. Well, I'll say first of all, relating to Palantir, we are members of their Foundry for Builders program. So we use their software. We license their software Foundry. It's the user interface to Echo, which is our business intelligence and market data offering. But that's the extent of our relationship with Palantir. So our business dealings and their business dealings are completely unrelated and independent of each other. So we don't have any kind of partnership or affiliation in any sense other than licensing their software. What we do have in common, and the reason why we license their software is, of course, because we are sifting through large amounts of data and trying to make sense of it. I would say that when you talk about sifting through large amounts of data, that can evoke ideas of kind of what you lay out, the Internet of Things, and sort of tracking people and their locations. And so I want to be very clear that we do no tracking of individuals. So when we're looking on the blockchain, what we're looking at is different kinds of entities that are operating. So that includes some of the larger exchanges, so and as well as gambling sites, payment processors, that sort of thing. Our primary focus is on sort of the darker side of the blockchain, which would include darknet markets, ransomware, Russian crime syndicates, human traffickers, entities like that. And that's where our focus is on identifying those on chain. Individuals, well, for one, that's there is no contemplation on our side of tracking individuals. It's that just from an ideological viewpoint, that would not be something that we're comfortable with. That being said, even if we wanted to, I don't think we could. That would be a very difficult prospect.
If the cryptocurrencies continue to act as units of trade as they currently do, unofficially yet tolerated by governments, then do the operators of blockchains, which they claim decentralization, but the closer you look at most blockchains, the more you can detect an element of centralization, either based on the fact of the community who maintains it, which is certainly a subset of the human race, so therefore centralized in that segment of society. Or then, of course, you have, in the case of Ethereum, it's been revealed that JP Morgan has become the majority shareholder of the company that operates the two platforms that access the Ethereum blockchain. So are you reliant on elements of the blockchain cryptocurrency community to provide you interior vision or look or access to the transactional flow on the blockchain?
No. To your point about the centralization of blockchains, I do think that is a problem, that it is a handful of mining pools that control the vast majority of the mining power on both Ethereum and on Bitcoin. That is a concern. The Bitcoin is also predominantly held in the hands of a few parties. So if Bitcoin goes on to become, say, the world currency, it doesn't make sense for there to be a handful of individuals that have, I don't know what percent, but call it 20% of it sitting with a small number of people. So I do think those are problems. All that being said, I would separate that centralization from anything that we're focused on. We do not rely on any kind of proactive action by the blockchains to provide us with information. You have privacy blockchains like Monero, where we have zero visibility, and I'm not going to say that it's impossible to be able to see through Monero, but we have no interest in doing that. That's a privacy technology, and that is capable of coexisting perfectly well alongside the more transparent solutions like Bitcoin. And to be even more specific, I would say that one of the big developments that's coming up in Bitcoin, which is talked about, but I think not nearly enough, is the second layer solutions, most notably the Lightning Network. And the Lightning Network is going to allow people to transact, essentially for free. The transaction fees are a fraction of a cent. It's instantaneous, so the transactions are confirmed immediately. It's essentially infinitely scalable, far beyond the number of transactions that can be managed by, say, credit card companies or really any benchmark in the traditional world. And as a side benefit, it's also anonymous. It uses the same technology that Tor, the deep web browser. It uses the same technology that uses, called onion routing. So it's really inevitable, and I should say Lightning Network is already functional right now, right on the Bitcoin mainnet. And so that's one of many examples of privacy technologies and ways of transacting privately. I think the way that the balance is going to be achieved between the auditability of the first layer blockchain and the anonymity of the second layer solutions is simply that, very, very much like cash, the way cash works in the traditional world. It's that if the amounts you're transacting are not huge, it's not going to raise any eyebrows. If you go to pay for your lunch using a dollar bill, that's not going to, nobody's going to blink an eye. If you deposit some cash in the bank, that's also not going to raise any eyebrows. It's only going to raise eyebrows if the size and the nature of it is something that is out of the ordinary. And I imagine the same is true in the blockchain. That sure, you can anonymize your transactions using the Lightning Network or other technologies like that, and I think that's going to be totally fine and acceptable and is not going to look strange to anybody. It's only the cases where you have criminals that are trying to launder millions of dollars through these platforms where that's going to look a little strange to see $1 million in coming out of the Lightning Network or $1 million coming out of Monero being deposited in an exchange. Those are the cases where it's going to raise some eyebrows. So I think you have this natural equilibrium between the universe of anonymous transactions, which will most likely be predominantly on second layer solutions, and the underlying blockchain, which will be the settlement layer, which will be auditable.
Do you currently have customers in law enforcement or in government that you're working with?
Yes, we do.
And I guess you couldn't really talk about those in this environment.
No, it would not be appropriate for me to comment in details on that.
Well, that's really intriguing, Max. I've learned a lot, and I think I want to learn more. So we're going to dive into your company quite in depth here in the next weeks ahead. So I really appreciate your time today, and we will have you back in due course. I will have a pile more questions for you because this really intrigues the hell out of me.
Yeah, great. It's been great chatting with you. Thank you very much for inviting.
Thank you. Bye for now. So no, this company is not public. They just finished a $12 million Series A. But interesting, Lucid, I like the way the CEO disavows any association with Palantir beyond licensing the platform.
Right,
that is at the foundation of their technology, but that's enough for me. Anyways, interesting company to watch. Basically,
the plans are to go public at some point.
Well, yeah, it's a U.S. company, so they did a $12 million Series A. In the U.S. context, they build a business and then say, let's go public. Not like Canada, where they say, let's go public.
They want to get it down the road quite.
Right.
Like
they want a $1 billion valuation.
Uber.
If you don't come out of the chute a unicorn, you're nobody. Here in Canada, we like to say, well, let's take this company public, and then we'll try to find a business.
One of the big electric car companies in the States is having that problem. They feel they've come out.
Rivian.
Lucid Group.
Lucid Group. Never
Okay, came out, it hit year high, $57, and it's now 24. Lucid, yeah. But you're right. The other one was, Rivian.
Let's pull up a chart of Rivian just for shits and giggles, as they say. Oh, it looks like a TSX mining deal.
I mean, and these are liquid. I mean, if you've got 1 million shares, you can get out of this.
Yeah. Yeah, baby. Anyways, so yeah, that company hasn't done very well. Look at the price of nickel now, even after that run up to $100,000, which that's got to stay on the chart, eh? That's a teaching moment right there.
Yeah.
You want to see a broken concept? It's the futures market.
Well,
say it.
This unfortunately, this says that basically the spike in nickel has been so dramatic that that is a.
Yeah, but look at. But after this, it still stayed up here.
But you know what? I guarantee you, it keeps drifting lower now.
Yeah.
It just keeps drifting lower.
They need to take this right out of here because it's become completely misleading.
Well, but it happened.
Yeah, from a technical basis, though.
You got to see that.
You cannot draw any technical sort of projection.
Well, you know what you can say? You can say, stay away from that.
Stay away from nickel?
For the time being. Well, no, at that price.
Yeah.
It's got to go back to where it took off from.
Yeah.
And resume an orderly.
Yeah.
That's how it works.
Yeah.
Now maybe it's getting close.
Yeah.
But I wouldn't touch this for a while.
Yeah. How come the U.S. 10-year is only at 2.17? This is what I want to know.
And the 2-year rate is up to 2. Like the spread between the 2 and the 10 is very narrow, which they don't like these flat yield curves, right? Flat yield curve, no good.
Right.
No good.
No good.
You say it's only there, but look where it was back here. Look at.
Yeah. Well, let's take a look at some of the housing numbers here right now. These are the prop tech companies. There's our Voxtur. Oh, a quick word about Voxtur. So that breakout quarter that we've all been waiting for,
it's
going to be announced in April or May. I'm not sure which yet. Could be a little into May.
Yeah.
But I think they're going to blow the numbers out of the water, according to management. Did you see my last interview with Jim Albertelli, the CEO?
No.
Well, then you're missing out.
Okay.
Anyways, the whole sector, real estate sector,
FYI.
These are all property technology companies. Look, they're all up 3% today. Why is that? It's because the real estate sector is about to light up a bit with all of the people who are going to be in default. So, let's go to the real estate numbers.
Oh, yeah? You think so?
Yeah, well, so this is misleading. So they raised the rates, and the 30-year mortgage, this is the 30-year mortgage number, is only up, like this is still in, like here we are March 10th. This is where they raised the numbers, and it's still lower than it was before they actually came out with. So this here tells me that they were expecting 50 basis points. This here tells me that, okay, we got 25, at least we're moving in the right direction. But where do you see interest rates going for the 30-year mortgage?
Yeah, but they don't write it out for you. You can't, there's no magic place to find this.
The 30-year mortgage right here. The 30
No, I know, but it's clearly the trend is up.
Oh, very much so.
Okay, so what else do we want to know? Do we want to know every little move, or do we happy to know what the trend is?
Well, I want to know every little. I want to know what the future holds.
Yeah.
I want to see into
Well,
the future.
listen. Come back tomorrow and get a free beer.
Free beer tomorrow.
Free beer tomorrow.
We should put that sign up.
Yeah.
You know,
What? You'll have everybody in the neighborhood.
While we're on the
hanging
topic
around.
of memes,
Is it tomorrow yet?
check out this little meme. Ed brought this up, and I thought we would put it on the show. You received this from a guy called Pat Valenti in the UK.
No, in London, Ontario.
London, Ontario.
Yeah.
Oh, okay. London, Ontario.
Yeah, he does like mining companies that come here, or any small cap company. He'll put a luncheon on for them
In London, Ontario.
in the local community.
he knows the dudes.
He knows quite a few guys. You know, I've known him for a long time, straight up guy, and he comes up with some interesting perspectives on things that. Oh, I never looked at it that way, but when you look at this, it looks like it's all set up against you.
Yeah.
Like you feel like, am I being victimized?
Yeah.
Like, you know.
Okay, so
Especially when you
what
look
is
at
this saying here, Ed?
Well, it's all about big banks, big pharma, the military, the media, government, and you get a couple of choices, and the choices.
So big banks ensure we stay in debt. Big pharma ensures we stay sick. Weapons manufacturers make sure we stay at war. Legacy media ensures we stay ignorant. Government ensures it's all legal, and voting Republican or Democrat ensures it will all continue. So this is a very American perspective.
Yeah. And look at them, what they spend on their defense.
Yeah.
And you think they got low taxes,
Yeah.
but when you add in the defense, it's mind-boggling what they spend.
Oh, it's embarrassing.
It's well.
Interesting.
I'm just going to ask you, what do you think of this AMC?
Oh, right, AMC. So let's pull up that chart.
And remember, this is a theater chain.
Was a theater chain.
Well, it still is. I just looked at the results.
Really?
They did $1 billion in revenue the last quarter.
Okay, so and they just announced what?
They're buying an old gold and silver producer out of this. I think it's the state of Nevada. Called, it starts with H.
Highcroft.
Highcroft. That's it. You got it. You got it.
Yeah.
And which makes it a little more colorful is the fact that the Toronto billionaire, the gold billionaire, Eric Sprott, is involved in this, and he's going to match AMC's investment in this company, which is really down in price. If you look at the chart
does Highcroft have an operating mine?
They've had operating mines. Whether they're still operating them, I don't know. I don't know the status. But the stock was up to here like $4, $5, $6 a couple of years ago, maybe $2 or $3.
Yeah.
It's now like 30 cents.
Well, that's interesting. So they bought control of the company?
It looks that way.
Highcroft Mining Holding Corporation. Well, it certainly has woken up here. Yeah, well, but now it's,
Year high 747, year low 28 cents, and it's currently.
Let's go 1 month. Okay, so interesting story.
Well, I'm
going to call the CEO and get him on for an interview.
And you know what? The other thing is, this AMC, they're sitting on like $1.8 billion in cash. $1.8 billion.
Really? So they could put a mine in
Well,
production
you know when
tomorrow.
when the Robinhood crowd took the AMC stock from almost certain bankruptcy, they raised like $3-4 billion. It was
proving once and for all that there is no such thing as smart money.
A fool and his money soon part.
Well, and they give it to some other fool.
Well, some people seem to hang on. Some few
people do. Yes.
Very few.
Yeah. Elon Musk seems to be doing a good job of it.
You know, I guess his wife came out in an interview and said that he lives like he has no money.
Really?
Like he said something to the effect that he's got a hole in his mattress.
I saw that he had said that I wouldn't bet the bank on cryptocurrency. And did you see that the European Union came out and officially warned investors, if you invest in crypto, be prepared to lose all of your money.
But these things drag out a little longer than you think, and that's why you can remain in a position. And remember, how can it stay illogical? But it can stay illogical longer than you can remain solvent.
On that note, let's take a look at our cryptos, shall we? Here's our crypto list that we're following.
I think Crypto Spectre Bitcoin's over 40 again.
Yeah, look at that.
Jesus.
Woohoo! So Ethereum is even back to 2,800. Could have made a nice penny there. Oh, you guys got to come to our website and sign up for our newsletter because we're going to start dropping little pearls of wisdom that will be actionable investment ideas. Because you know what we've realized is that we've been in this game so long that making money is almost effortless for us.
Yeah, we're going to talk about some of these moves in commodities.
Well, we haven't talked about my favorite commodity of the century right now.
I think we're commodity specialists.
Lithium. Well, I would say that we're more public company specialists.
Special ed. Specialist ed.
Special ed. Anyways, that's our show for today. And if you want to hear about more, well, we've got some credible lithium stories coming your way this week coming up.
Yeah.
We've got a direct lithium extraction technology, which I am going to be participating in on a financial basis as well as a professional basis. If you want to learn more about that and you're accredited, shoot me an email. jwest@MidasLetter is my personal email. Shoot one to Ed Molesky at live.ca.
Live.com.
Live.com?
Yeah.
God, we got that wrong.
No, live.ca.
Anyways, spring is here.
No, live.com.
Let's go out and party.
Okay.